good news for Sea Limited shareholders because the company just reported their latest earnings report. At the time of making this video, the stock is up 13% on a double beat. Now I'll start off with a couple of comments here from the CEO. It was a great year actually for Sea Limited. They did, let's say, put the company back on track. So in 2023, we achieved profitability, strengthened our market leadership for our e-commerce business, grew our digital financial services business, and stabilized the performance of our digital entertainment business, Garena. Looking ahead, we expect 2024 to be another profitable year. We are happy to have solidified Shopee's market share in the region, and we intend to maintain our market share in 2024. We expect Shopee's full-year GMV growth to be in the high teens range, and its adjusted EBITDA to turn positive in the second half of the year. For SeaMoney, 2023 was the first year of positive profit, primarily attributed to our consumer and SME credit business. For Garena, I'm happy to share that we are seeing improved user acquisition and retention trends for Free Fire. In 2023, Free Fire was the most downloaded mobile game globally according to Sensor Tower. It remains one of the largest mobile games in the world. With this positive momentum, we currently expect Free Fire to grow double digits year on year for both user base and bookings in 2024. This is very important because remember, the entertainment side of the business here is, let's say, their cash cow, or at least that was their cash cow. And with that segment, it allowed them to invest more in the e-commerce one and in SeaMoney. But the last couple of quarters, we've seen quite some weakness with regards to the entertainment side of things. So it's nice to see that, well, they're already experiencing some positive signs and expecting more positivity throughout 2024. Now, before continuing, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, we really appreciate that. Want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So let's start off with a major overview here. So total GAAP revenue increased 5% year over year, with the majority of it, of course, coming from the e-commerce side of things. Then we've got the digital entertainment side, and third, SeaMoney. As we look for fiscal year 2023 as a whole, it's a bit of the same, also up 5% year over year. As for total adjusted EBITDA, that's actually down year over year for the quarter. Why is that? Well, because same quarter last year, as you can see, your adjusted EBITDA for the e-commerce side of the business was positive. This quarter, yet again, we're in negative territory. For the full year of 2023, major shift here because the focus in 2023, especially the first half, was focusing on profitability. Now, another good thing here is the fact that their cash equivalents, short-term investments, and other treasury investments are up another $600 million this quarter. Has been trending up for quite a while, so that's great to see. Then looking at the different segments here, starting with Shopee, the e-commerce side of things, GAAP marketplace revenue is up 23% year over year. That's core marketplace revenue and value-added services. But if you look at the adjusted EBITDA, we can see here yet again, as we've seen before, here adjusted EBITDA negative compared to a positive quarter, same quarter last year. But they do say here that adjusted EBITDA in Q4 improved 35% sequentially from Q3 2023. As for gross orders, that's up 46% year over year, and GMV is actually up 29% year over year. Great momentum. With regards to digital financial services, or SeaMoney, GAAP revenue there increased 24% year over year. Consumer and SME loans principal outstanding was $3.1 billion. That is up 27% year over year. Then looking at digital entertainment, Garena, you can see here bookings wise, we're up again quarter over quarter, of course, still down year over year, but this is now the second quarter in a row where we are seeing a rebound there. With regards to quarterly active users, that dipped yet again after 2 quarters of staying stable. So that's something to keep an eye on. But quarterly paying user ratio remains the same at 7.5%. I do want to show you one extra thing here is the average bookings per user was 86 cents. That's up 4.8% quarter over quarter. So of course, if you compare it to the likes of, for example, Roblox, this is still peanuts. With regards to gross profit for the whole business, it's actually down 10% year over year. But for the fiscal year 2023, that is up 13% year over year. We can see clearly that they started to reinvest quite a lot in the business, in the growth of the business. You can see this with regards to cost of revenue, that's up 19% year over year. Sales and marketing expenses up 104% year over year. R&D is up 15% year over year. It's true, general and administrative is down 34%. But if you look at these three key metrics here, you can clearly see that they are starting to reinvest quite heavily in their business. And so net income for the quarter, it's back in a loss here, $111.6 million compared to net income of $422.8 million same quarter last year. But overall for the year, it was a positive net income year. You can actually see the major improvements here, right? The difference between total operating expenses this quarter and the same quarter last year. This quarter, total operating expenses increased 16.7% year over year, but for the whole year, it decreased close to 16%. As for net income, well, the same story. This quarter, net income went into a loss, but for the full year, huge improvement, as you can see year over year. So they're definitely going back to a growth phase while still being quite responsible with regards to profitability of the whole business. One extra thing here with regards to the e-commerce side of things, more specifically in Brazil, pretty important market for them. So unit economics continue to improve with contribution margin loss per order improving 88.9% year over year to a loss of just 5 cents. I'm saying just 5 cents because of course we're very close to being break even. But last quarter it was 10 cents, not a loss, it was 10 cents. And so right now, if we look at the graph, the stock already was up over the 200-day moving average last week with a big green candle here. 200-day moving average sits at $48. Right now, pre-market, the stock sits closer to $57, which was previously, let's say, a small short-term rebound area back here in July 2023. Now, of course, the fact that we are already up over the 200-day moving average is already quite something. This should provide the stock with some types of safety net. Let's say if we have some red days, the stock can just rebound on that 200-day moving average. Remember, the last time we went over the 200-day moving average was here in April 2023 and May 2023, a short double top, and then we went back under it. And well, it was since then that the stock did not even try to go over the 200-day moving average. So quite some positive momentum right now with regards to C stock. Of course, again, it's very important to note that not only does the stock have momentum, but the business itself as well. As they said here, they expect Shopee's full year GMV growth to be in the high teens range and its adjusted EBITDA to turn positive in the second half of this year. Getting some positive contribution with regards to adjusted EBITDA from the e-commerce side of the business is definitely something very, very big and something that shareholders should be keeping an eye on. Of course, it won't happen tomorrow, but the fact that they're already announcing it right now at the start of the year means they are quite comfortable in achieving so. So, to conclude, good quarter by C, good guidance as well in my opinion. I think the momentum is with them right now. I think the phase of the pandemic where they reach sky-high valuation, sky-high growth rate is over, but what's also over is the fact that the business was deteriorating. The focus is back on, they showed profitability, now they're showing growth yet again, and they can sustain that. So that's great. Of course, do share your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.